Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I'm going to talk about beverage stocks, okay? So the four top beverage stocks in the US and I'm gonna do a comparison between them, okay? So leave me a like if you find this video interesting and subscribe to the channel. Let's begin. Alright guys, so here we have the four of them, okay? So Coca-Cola, ticker symbol KO. Pepsi Cola, so ticker symbol PEP, PEP, and Monster Beverage Corp, ticker symbol MNST, and National Beverage Corp. Okay, so ticker symbol Fizz. In terms of prices, in 2020 we had that Coca-Cola hit a high of $60.13 and a low of $36.27. The YTD for Coca-Cola is the lowest of the four, okay, so minus 21.26%. When it comes to Pepsi Cola, we have a high of 147.20, a low of 101.42, and as a YTD, we have a minus 5.61%. While Monster, here we are becoming positive with a YTD of 6.89%, and a high of 73.47 and a low of 50.06. Fizz, we have a high of 65.50, which we did like 2 weeks ago, 10 days ago, and a low of 35.71. The YTD for Fizz is 21%. Okay, in a positive. When it comes to revenue, so we realize that in terms of revenue dimensions, Pepsi Cola is the biggest with 67 billions and followed by Coca-Cola 37.26 billion, and we have Monster and 4.2 billion, and Fizz is the smallest one, okay, just 1 billion in revenues. In terms of the cost of revenues and gross profits, we have that Coca-Cola is making 22.64 billion as gross profit, Pepsi 37.029 billions, Monster Beverage 2.5 billion, and Fizz $384 million as gross profit. Okay, that gives us a gross profit margin which is very high for Coca-Cola, very high as well for Monster, not bad for Pepsi, and Fizz, which is the smallest one, okay, 37.87%. Anyway, the gross margin is not important as the operating margins and net margins, okay, so those two are very important. When it comes to operating income, we realize that Coca-Cola makes 10.5 billion, Pepsi 10.29, Monster 1.4 billion, and Fizz 180 million. Okay, and that gives us operating margins that are very great for Monster. Look at that, 33.40%. Okay, very high margin. The loser is Pepsi Cola, okay, with just 15.32% as operating margins. When it comes to the final and most important margin, we have the net income, okay? And when it comes to the net margin, the winner, again, is Monster, okay? 26.37% of net margin, which is very great for a beverage company, okay? Followed by Coca-Cola with 23.94, and the loser is Pepsi Cola, okay, with just 10.89. Fizz is pretty low as well with 13.91%. What's important to know with the net margins is also the history of it, okay, together with the history of revenues and income. So for Coca-Cola, what we realize is that the revenues went up until 2012, and from 2012 they started to go down, okay? So Coca-Cola's revenues are going down, okay? And this is of course not something that you want to see when you buy a stock, okay? The revenues, they are going down for consecutive years, okay? This is almost 8 years of revenues that are going down. So together with it, also the net income is going down. We look at this low in 2018, and when it comes to the net margin, we realize that the overall has been decreasing, just to touch a low in 2018 with just 4%, and now is going up again. Okay, anyway, overall we can consider as an average for Coca-Cola around a 20% in net margin. Okay, but the history is telling us that has been decreasing for a while, and now it's going up again, but just in the recent years. Okay, anyway, I don't like the fact that revenues are going down. This is something that I really don't like for Coca-Cola. Probably this is telling you that basically they are losing some kind of market shares, okay, because Coca-Cola is already in all the world and they cannot improve it too much. They have other brands, but anyway, when you see that, it's not positive. Pepsi Cola, let's take a look. Pepsi Cola, we went up in revenues again until 2012. And from that, we had been pretty consistent, okay? So going down a little bit and up later on, but overall consistent, okay? And when it comes to the net income, has been very consistent as well. But that gives us a net margin, which has been decreasing, okay? And overall, right now, it looks like that it's been a lot near 10%. Okay, we had this spike back in the last 2 years, but now we are back again around 10%, which in my opinion for Pepsi Cola, they are not able to move from this margin. Okay, the business is less efficient than, for example, for Coca-Cola. Here, in my opinion, we have the winner. Look at this. This one, guys, it's Monster Beverage, okay? This is what you want to see in a company before you buy it. Look at revenues. Look at this growth. The consistency of this growth is magnificent, okay? The revenues went higher, 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 high, almost in a straight line. And with that, also the net income, okay? So what that means is that basically they have improved the efficiency of the business, and we see that from the history of the net margin, okay? Because Monster, we have around started with 17%, and right now overall this has been a positive trend, okay? Look at that, from 2013 it's going up, 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 and right now we are around, as I told you before, 26%. So of course this is something that you want to see, revenues going up, net income is going up, and the efficiency of the business is going up. Okay, so Monster Energy, very great in these terms. Let's take a look at the Fizz. Okay, so when it comes to Fizz, we had the revenues has been pretty constant and went up just in 2014 to have a peak in 2018, and right now they are stabilizing, okay? But when it comes to the net income and net margins, we see that basically it's been almost the same road, okay? So the business started very low and we are going up in net margins, so also the net income is going up and started to increase. We reached a peak of 16.29 and now it's decreasing again, okay? Of course, it's less efficient Fizz than Monster Energy, okay? Also, we can see graphically. So in those terms, the winner is Monster Energy and the loser, in my opinion, is Coca-Cola and Pepsi Cola, okay? But let's also take a look at the balance sheet that we have. So in terms of total current assets, total current liabilities, we have that Coca-Cola has 28.23 billion in current assets and current liabilities 32.39. That gives us a current ratio which is below 1 for Coca-Cola, okay? It's 0.87. And this is not great, guys. I don't like it very much comparing with the other three that they are all above 1, okay? We have Pepsi Cola, total current asset 24.26 billion, current liabilities 22.07. The current ratio is 1.10, okay? So better than Coca-Cola. And here we are going through the heaven, because when it comes to Monster, we have current assets of 2.04 billion, current liabilities of just 700 million. That gives us a current ratio of 2.92, okay, almost 3. And even better with Fizz, okay, the company is pretty small, but when you go through the current assets, 400 million, current liabilities, 100 million, that gives us a current ratio of 3.73, okay? So those two are very stable in terms of the current situation of the company, okay? Coca-Cola, guys, 0.87, okay? It's big, okay? They have a lot of history, but honestly, it's not something that I like to see, okay, when I buy a company. When it comes to total assets and total liabilities, we have the Coca-Cola as 94 billion in assets, 74 billion in liabilities. That gives us a ratio of 1.27, okay? 1.19 for Pepsi Cola, and look at that, 4.83 for Monster Energy, okay? This is wonderful. And 3.53 for Fizz. So overall, this confirms the fact that in terms of the balance sheet and the stability of the balance sheet, Fizz and Monster are way better than those two giants here, okay? No doubts about that. When it comes to see the debt and the net debt to equity ratios, here it comes the problem for those two giants. Why? Because Coca-Cola has a debt to equity ratio of 254.07%. When we deduct for cash and cash equivalents, we have a net debt to equity ratio of 185.70%. Okay, so when you take this and you add the fact that the current ratio is 0.87 below 1, well, honestly, I don't like the financial situation of Coca-Cola, okay? Absolutely not. Comparing also with the revenues that are going down, this is something that it's not encouraging for me to invest in this company, okay? Pepsi Cola is even worse. The debt to equity ratio for it is 304%. When you take the net debt, is 222.39%, okay, which is huge. Look at Monster, okay, the debt to equity ratio is below 1%, and the net debt is 0%, okay, so wonderful. Monster is wonderful company. And when it comes to Fizz, it's not bad, because the debt to equity ratio 11.14%. When we deduct for cash, it becomes 0%, okay? So from this comparison, you can see how different the situation is, okay? The giants, they are big, they say, okay, we can do whatever we want, we take that, but the reality of the fact is that Monster is way better than Coca-Cola and Pepsi Cola, okay? When it comes to the market cap, we realize that Coca-Cola is right now around 187.12 billion, Pepsi Cola 179.78 billion, so they are very similar, those two. We have that Monster 35.75 billion, and the smallest one is Fizz, okay, $2.88 billion company. The book to value is around 9.4 for Coca-Cola, 13.25 for Pepsi, and 9.23 for Monster, 6.8 for Fizz. Here is just to summarize what I already said before in the last few years. In the last few years, we had, look at that, Coca-Cola decreasing revenues, okay? Just a little bit better in 2019, but overall, it's not something that you want to see when you buy a company, okay? Especially with this amount of debt. When it comes to Pepsi Cola, we see very consistent, very constant, okay? Not too much of a growth. And earnings are a little bit going up and down. As I told you, the business of Pepsi Cola is the less efficient of them all, okay? We just have to see how they do like the double of Coca-Cola, but at the end, when it comes to net income, they make less, okay? 8.9 billion, Fizz 7.3. This is why I'm telling you that Pepsi Cola business is less efficient than everyone out there. Monster Beverage, guys, this is the best of them all. Look at that. Going up in the straight line, and earnings are doing basically the same, okay? The business is the most efficient of them all. It's the one with probably the highest potential, okay? Followed by Fizz, which is not bad as well, okay? So as an overall, which one is the best? In my opinion, Monster Energy is the best beverage stock out there, okay? Wonderful revenues growth, wonderful margins and margin history, current ratio epic, asset liabilities ratio even better, and the debt is basically none. So the market cap makes me think that the company has still a potential to growth, and I really like Monster Beverage, okay? Second best, it's Fizz, guys. Here, what you have to understand is that this one is more speculative, simply because of the size of this company, okay? Anyway, not bad. I don't very like the margins. Anyway, I believe that the current ratio, it's very positive, okay? And the total assets liabilities too, very low debt, which is positive for a small company like it, and this is the more speculative, okay? This is the one with the highest upside potential, as always, you know, okay? But in my opinion, the best of the best is Monster Beverages. When it comes to Coca-Cola and Pepsi-Cola, guys, honestly, I would not put a dime in those two companies, okay? I absolutely don't like them. They are already too big, mature, and I don't know how much honestly they have left to grow. Revenues decreasing for Coca-Cola, revenues not increasing much for Pepsi-Cola. These debt levels are crazy, okay, absolutely crazy, considering also the current ratios, which are very low, especially for Coca-Cola, which is below 1, okay? So honestly, I know the rumors, Warren Buffett, Coca-Cola, all those things, but in my opinion, Coca-Cola is the worst of them all. So of course, Warren Buffett bought Coca-Cola back, I don't know even when, okay, back at the beginning, at the basics of Coca-Cola. So of course he made a lot of money with it, but for us, that we have to buy something now, in my opinion, it makes more sense to buy Monster comparing with Coca-Cola, okay? So I hope you find this video interesting, guys, and leave me a like and leave me a comment below. Tell me if you own one of those 4 stocks, and subscribe to the channel, and as always, have a wonderful day.